All right, so we'll start off with some quick introductions for anyone who didn't hear at the beginning. I'm Joshua Silver. I'm the founder and CEO of Rainforest. We are an embedded payment solution, and we help vertical SaaS companies add payments to their products. I'm joined here by some absolutely phenomenal names. These folks on the stage collectively have decades of experience in not just payments, but embedded payments. And so first, I'd like to introduce Emily Bartels, who is the VP of Payments at Skimmer. They do hundreds of millions of dollars in payments. So Emily, would you like to introduce yourself?
Yep, super excited to be here. Thanks, Joshua, for inviting me to join this panel today. So my current role, yes, I'm VP of Payments. I also cover all ancillary revenue partnerships, the whole kind of gamut of things at Skimmer as well. But my claim to fame is I spent over 12 years at Mindbody Software and ran the payments business there and helped grow that to what it is today.
Next up, we have AJ Axelrod, who is the VP of Payments and Financial Services at Clio, and they are representing the billions of dollars of processing range. AJ.
Josh. It's great to see everyone, so many familiar faces. Like Emily, I started this journey at Mindbody, or maybe a little bit Visa before that. I'm glad that she's a friend now, not just a colleague. Clio is the legal practice management, CRM, documents, and drafting, and really all those kind of things for lawyers. So think of that as like the system of record in action. And I lead payments and financial services there.
All right. And finally, Rahul Ampol, who is the VP and GM of FinTech for ServiceTitan, and they process tens of billions of dollars of payments. So Rahul.
Thank you. Well, I'm super excited to be here. I'm Rahul. As I said, I'm the GM for the FinTech business at ServiceTitan. We're the operating system for the trades, and we do a variety of different things, including dispatch, scheduling, the whole works for the trades businesses, including payments and financing and a bunch of others. See a lot of familiar faces in the room here, so I'm pretty excited to talk to you all. I have a history in FinTech. I worked at Plaid before this for many years. Also spent time at Yelp for many years running payments, advertising, a bunch of other product teams. So very excited to talk about all things ServiceTitan here.
Very good. So just a quick show of hands before we get started. In the audience, who here is at a vertical SaaS company that offers payments today? Put the hands down. Who here is thinking about offering payments but doesn't yet? All right. When I asked that question 10 years ago, it would have been flipped. You would have had just a couple people who were doing it and a whole lot of people who were thinking about it. And so in the last 10 years, we've come so far. Our head of payments at Rainforest, Becky, often says the best way to be successful with payments, counterintuitively, is not to talk about payments. And so that's how we're going to start the panel today on payments, is by not talking about payments. The question I want to ask our panelists today is, before you get too far down the path of working on your payments project, we've all kind of talked about in the prep call how important it is to make sure you have product market fit, to make sure you're prepared to do it. And so what are some things that our audience should be thinking about before they start down the path with payments to make sure that they're successful, to make sure they have product market fit? Emily, we'll start with you and work our way down.
Yeah, I think the first and foremost, and I also have done consulting for a number of years on the side and worked with many startups as well, and as well as private equity-backed companies that maybe have a big base of customers and they're thinking about doing payments. And the first question is, well, who should I integrate with? And I don't think that's actually the first right question. Yep. The question is, what is the problem that you're trying to solve for the customer that you're not solving today, and where can you start being their hero? Because really, at the end of the day, you're processing a payment, and there's a lot of value in what partner you choose and how you integrate with them and the APIs and embeddable components, and you got to think about all those things. But really, it's everything that leads up to that that's really the most important. And so you really need to think through what is the problem that you're trying to solve for that customer. And then you've got wonderful partners like Rainforest and others that can help you actually facilitate that payment from that point forward. But the first thing is really, if you don't actually have a problem to solve, it's going to be really difficult to launch payments. You've got to figure out what that is.
Yeah. AJ.
Yeah, I mean, the other question is who should I hire as a GM? And probably not the question you should start with. But yeah, I think what Emily keys on is actually fundamental for all business, right? You exist to solve a problem for a customer, and I think when we talk about these embedded products, we'll often talk about like data gravity or like workflow gravity, and payments really is a workflow gravity thing. And so you need to think about what is that workflow or process step that's immediately adjacent to actually processing a payment. And then to the not talking about it, it's like, well, the really great payments experiences are transparent. They just kind of fade into the background, right? Whether that's like a card on file transaction that just happens for a subscription or easy checkout, in a retail store, you sort of aspire for a non-event rather than an event. And if you start with that customer problem in mind, you really identify the workflow and the particular pain point, I think then you can start to peel back like the depth of that product market fit. Like we think about this a lot from our MindBody days. We say like there was the beauty, salon type business and the fitness business. And it would be easy for like in the spreadsheeting math. Be like, well, the bigger customers maybe got a better discount, but this much volume and this take rate, and like boom, is your revenue in the future. And what you didn't think about really was like the product market fit of like what problem are you solving? And for the fitness, it's one to many in the class. It has to be a quick turnaround. I want them to book in advance. I have like a scarcity problem. Maybe I want to upsell them on something that's very different than the one-to-one in-person service in the salon that usually has a separate checkout with a person who sits there all day. And so the business problem is different. One's a real revenue driver. The other one feels like an expense to them. And so you have to think through those problems. And like that's the key, right? As Emily said, it's about understanding your customer's problem, and you work from there. And then like the P&L tends to take care of itself. And your first year of payments is like, man, we did like a lot of work and there's like a little bit of volume. And then it's like a little bit more and a little bit more. And in a couple of years you look back and you're like, my God, this thing's like the money gun is like pointed at us.
Money guns pointed at us. I think a lot of people probably haven't heard the term data gravity and workflow gravity. Can you explain a little bit more what you mean by that?
Yeah, a lot of pontificating from a former private equity guy. The workflow, right, of like, if a workflow is happening in your product, all the things that happen connected to, adjacent to that workflow, you can build around because everything centers around this workflow, right? There's gravity from this workflow. Things are pulled towards it. The data side would be like, do you have information that others don't have? And can you do something with that information? I think that is somewhat applicable in payments when you get into underwriting and risk management and those kind of things, particularly if you're forward payments type business. But it without jumping the gun, it gets into the other financial services more. When you start to talk about lending or things like that, when you say like, how do I know something about this customer, like asymmetric information? And that's where like the data part really starts to matter. But typically as a vertical SaaS platform, you probably have both. But you need to understand like which one you're using and why and what problem you're solving.
Oh. Yeah, a lot of interesting insights here. The thing that I always go back to is like, we're in a vertical SaaS company. Like that's our thing, and then we're trying to add payments to that. And so it comes back to the core question that we should always answer for ourselves is like, what is the customer's going to tell us often, what is the problem that they have in their workflows, to your point? And what is the challenges that they're facing when they're collecting payments, which more often than not, they're already doing in some form or fashion. Whether that be an old paper check or cash or like cards in some cases. So they will often come to you and say like, you've solved all these other problems for us, but we still have this other problem that we're like really struggling with today, and help us out. So I think that's like one part of it is like your customers will tell you, and so you have to understand what is the core problem that we're trying to solve for them in that particular context. So that's one part. I think the second part is also how do you make sure you understand what type of customer you want to solve that problem for first, because payments is one of those things, if you try to do it for everybody, everywhere, like many product problems, it tends to fail pretty miserably. So you got to get it right and get it right for the right customer at the right time.
Gotcha. So let's talk about, we now have the foundation. We've thought about what gravity, what pull is going to make people come to use the payments. Let's start to talk a little bit about scale. And whether it's your current role or in past roles, I think we've all on the stage worked in environments with billions of dollars of payments, so we've seen real scale. Walk us through some of the iterations. What are the things you should be worrying about when you launch payments? What are the things you should be thinking about at 10 million, 100 million, billion, many billions? we'll start in the opposite side. So Rahul, maybe share some thoughts on some of the key milestones. What things change? What do you need to worry about? Because a lot of times I hear people come to me and say, we're just launching payments, I need the absolute best rate possible. And I'm like, well, a couple basis points on zero volume is still $0. So let's first talk about adoption.
Everything times 0 is still 0.
That's right. Yeah. So Rahul, what are some of those different checkpoints and milestones?
Yeah, I think I always say that when you're early on in the journey for payments and you're new at this as a business, your optimization function is really about attach and usage and less about take rates, right? And often people flip it the other way around and be like, what's the best take rate I'm possibly trying to get? Because there's a lot of techniques out there. You can go hit up ChatGPT and it'll probably give you 100 ideas on how to improve your take rates. But the key thing from a product market fit is like you got to get attached and you got to get usage for that product. Yep. And it all comes down to are you building the right experience? Spending a lot of time making sure of that. Second, making sure that it integrates well with the rest of your vertical SaaS offering very seamlessly. So it actually creates incremental value. It's 1 + 1 = 3. It's not just a add-on there. And then the third thing from there is like making sure you are really executing well, right? Like every little detail works. To your point, it kind of fades away, makes it feel natural. And once you get that to happen, and the money gun starts to actually pop out dollars, then you can figure out like how do you get more to happen, right? And that's the take optimization and all the other stuff that you can think about. But that's how I think about it.
AJ.
Yeah, 100%. That like optimizing for take rate early on is like it's a misallocation of resources. It's not to say that when you're engaged in a negotiation with a partner, and if you think that's the right partner, you shouldn't try to get the best rate you can get. But your real primary focus needs to be on like, how do I get this in market quickly, continue to innovate quickly, and can I scale with it? Or is it going to buckle underneath that? I think when you get started in particular, you don't think about things like account hierarchies and is this going to actually work? We ran into this at MindBody of like, oh my God, there's like multi-location, but then there's franchise, and like those are different. And then you start being like, but they have an online store, does that get a separate mid? Like getting these things right really matters. I think as you scale, what you're afforded is just more resources to specialize on problems. And you shouldn't confuse size with sophistication. You also shouldn't confuse it with like success. It's very possible, and I would use our platform as an example of this, to be processing in the billions and still look at it and say like, wow, we are nowhere close to our total opportunity. There are others where it's like, this market only affords hundreds of millions. And so sophistication and size can be confused. But I think you get that ability to start focusing on different things, and so you can have multiple product teams focusing on different parts of the problem or on growing. You can start to have specialized functions within payments. Maybe you're going to take on more risk. You're going to think about underwriting differently. But what I'd encourage every company, regardless of your size, whether you're brand new, you're processing tens of billions, is to think about how you infuse it through the entire organization. It's really easy for it to be a side project because it could have like a separate P&L or it works economically differently. That is a recipe for underperformance. If your leadership's on board, your sales team knows why this is important, this is part of the software talk track, it's part of your support, it's well built throughout the entire organization and understood, a lot of the scaling problems take care of themselves because the company just scales. Mm-hmm. But if it's a side project, you're just going to constantly fight for resources. And I think as a founder, it's easy to say it's important, but I'd encourage you to like follow through on the it's important. Like, okay, for each one of my non-payments leaders, why is this important to them? How are they measured on this? How is this part of their work?
Emily.
I'm going to try to say something different here, hopefully, but not be too repetitive. But agree, you got to focus on attach and adopt early. But I would also go so far as to say, to quote Becky, like, don't talk about payments across the organization. And you get those resources because you're focusing on solving the problem. And I also would say that for those of you who are founders early on who are thinking about payments, maybe have started payments, even though you're small and you just want to focus on attach and adopt, I would say for somebody who has been through this path, do try to have a line of sight of what you want this business to be down the road, and try to make intentional decisions about who you partner with, how you do integrations, how you set up those workflows, so that you don't run into the problems that I think everybody here at this table has probably now experienced down the road. So you really want to think as much as you can about setting yourself up for success down the road. And that would be my biggest thing is if you want to scale payments, you don't want to integrate payments and then get to 10 million a month, 20 million a month, and then think, okay, and then I'll go fix this thing that I knew was a shortcut down the road, because it's really difficult to do that. And I would say some very good advice right now is you don't want to get into a situation in the payments world, we call this repapering. You don't want to have to repaper a customer if you can avoid that. So these are some little things that you need to be real intentional about, is how do you avoid a situation down the road where maybe you have 5,000 customers on payments, even 2,000 customers, even 1,000, and you want to switch your payment processor for whatever reason, right? Or you want to do a new type of integration. You just don't, it's very difficult to find the resources to do that. It can be very disruptive, and it's just not something you want to have to go down.
But I think underlying that, right, is like payments is a compounding business. It's not a linear business. And the choices, the shortcuts you take will have like also a compounding effect. And so you want to have a payments business where you can rapidly drive the attach, continue to grow the adoption, and then ride the success that your customers have. So you'll have like your subscriber growth, you'll have hopefully their revenue growth, and you're very well aligned in this as opposed to a lot of SaaS, where it's like if they do well, you do well. And so, pointing at legal services for a second, if you believe the general inflation data around legal services, which I'm inclined to believe, you'd say like there's 6 to 8% per annum inflation. And so that's a dream as a software company. Like I just get like 6 to 8% revenue growth, like doing nothing. Like I don't have to increase my prices. I don't have to get more usage of the product. Like that's just your baseline. And that's true for a lot of industries. But you'll get to ride your customer's success, and hopefully all the things that you do in the rest of your product that make them successful, you see also show up in this P&L. But Emily's 100% right that like you're going to pay for those shortcuts if you make them.
One other thing on what you're just saying is like early on, it's really important to get some good customers who are going to sing your praises, who are going to be your biggest advocates. Because payments, when it's done well, is like something that people are going to be like, yeah, this works great. I don't ever have to think about it. But if it doesn't work well, by the way, you're going to have the loudest critics who are going to tell everybody about it. They're going to be on Twitter, like the whole works, complaining about how terrible you are at doing it, and just destroys it.
We work in vertical SaaS. There are Facebook groups for everything.
Yeah, exactly.
There's like no tolerance for bugs with money, right?
Yeah,
like there's just none.
It has to be right. Yeah. Has to be right. So, as we look across the industry, there's kind of two trends over the last 5 to 10 years that I've seen that I want to dig into a little bit with the panel. The first is 10 years ago, I think we often heard SaaS companies talk about, they did the integration, they're done, quote unquote, with payments. I think we would all agree, when I sound like a broken record talking about attach rate, adoption rate, all basically around usage. And so I think collectively, I think the industries have figured out it's not enough just to integrate. That's actually the beginning of the project. You need to launch it, just like you would with any other product. Any good product manager is going to know that adoption of their product matters. Just getting it shipped out the door, if no one uses it, pointless. So I want to talk about that as a first trend, and how we can kind of bridge that gap from just integration to looking at the rollout. And then second is kind of a parallel question. We've also seen the increase and rise of head of payments, right? 10 years ago, there was probably a couple dozen in the whole country. Now there's probably 100, 200. There's 10,000 SaaS companies out there, though. So there's a huge lack of heads of payments out there that are qualified and knowledgeable. The vast majority have learned on the job or are learning on the job. But it's not enough just to have a head of payments and say, it's your responsibility, get it done. It's really got to be cross-functional initiatives. And so let's kind of talk a little bit now about how do you ensure that the whole team is rallied behind it And how do we move from the lens of just the integration's done, it's done, to the whole project really means a rollout and success metrics? Anyone want to, Rahul, why don't you start?
Yeah, I mean, so first thing, agree, like, head of payments is not a thing like 10, 15 years ago. Now it's like, it's definitely happening a lot more, but there's a lot more opportunity.
By the way, if you want job security, go figure out how to be a head of payments, and you will never be out of work.
One thing I think to what you were saying is like, the company needs to have a rallying cry around like what you're trying to go for, right? And we internally have a whole rallying cry around like how we think that digital payments really matters, and how we think that we can add value for our customers by having more digital payments, and something we talk about in the company, company-wide, like why it's important. And so I think that's like really, really important. I think to your other point about how do you get the team to execute better when you have like a payments team, and driving like those adoption metrics, having like the discipline about it, like, hey, we're actually going to track these things. We're going to look for that first customer, the second customer.
Yeah. And
what are
some of the key metrics you like to track?
We care a lot about attach at the top of the funnel. We care, how many customers are we selling into, and how many of them are attaching it. Second is how many of those customers are using it. What's our payment mix looking like, and what's that shifting like over time at a customer level, et cetera. And then individual products that we're enabling. For example, we launched a tap-to-pay product, and we care a lot about like how much is card present versus card not present volume, and how much that's being moved by some of those kind of products. So things like that we care about from a product perspective are really, really important. And to the earlier point, which is you got to get those first few customers to be successful with you. And when you get those customers to be successful, it actually has like compounding effects in that they are making your case externally for you, but internally you're going to learn the process. You're going to be like, we had this problem the last time, we're going to fix this. We had this onboarding issue, we're going to fix this. We had this like implementation issue, we're going to fix this, right? And that just makes the next 5, the next 20 go easier and easier. Before you know it, you're going to get that, that exponential effect.
Yeah. Emily.
Yeah. So similarly, I would say, so I kind of actually hate the word playbook, because it kind of loses the context of a particular situation. So there's not a perfect playbook here. I would say we've got startups in the room, we've got private equity investors in the room. Those two businesses look very different, obviously, right? And I think, again, the benefit of a startup is your new customer attach is so important. Going back to like looking to the future, you don't want to have a path where now you've got 5,000 customers that you need to go attach to payments, right? And so you're at this very sweet spot where you can build something that is just so core to the product that it actually feels unnatural to use your product without it, right? Like some of the best SaaS companies, like a MindBody that did really well with payments, if you're going to open a yoga studio, the first thing you do is you sign up memberships, and then that unlocks everything. Then you can book classes, then you can drop in. Without that piece there, the whole thing falls apart, right? And so think about that with the product that you're building. Is that I'm going to use the word playbook, even though I said I hate the word playbook. Is that a playbook that you can run? Can you make it so natural to your product that it feels unnatural to use your product without it, right? And then on the sort of private equity side, there's often, you acquire a vertical SaaS company. It may have some loose payments integrations with, several other processors. It's a whole different ballgame. But the sort of lesson here is that it is absolutely brick by brick by brick by brick to do that. Yeah.
I mean, we joke. It's a knife. It's like a knife fight. Like every day you're just going to go out and fight.
Yeah, it's a knife fight. You've got to think differently about, okay, I might actually need to go hire a specialized team to go try to get adoptions in that scenario, right? You may not actually need that at the other side, right? When you think about how you're going to launch payments. And then the other thing too is, it is especially, again, if you're one of those companies or you're an investor and you're acquiring companies, and it's like, hey, I think payments, this is going to be my easy unlock for revenue. I made a great investment. They haven't done payments yet. We're just going to insert this, and it's just going to sail.
Just do the integration and you're done, right?
It just doesn't happen. You need to have dedicated product leaders. You need to have dedicated go-to-market folks there. So it's just structurally, it's a very, very different business, and you need to understand that it's not just going and integrating with payment processor and then, whoop, customers are going to be happy and thrilled about this. You got to go in and change their workflows. You got to rethink and rebuild things. Tech stacks are messy. Like, it's just a totally different game.
Yeah, I mean, it's hard, no matter what. If it was easy, it would already all be done. I think I'll try to answer it from like a different perspective since we have so many founders or CEOs and leaders. You need to drive alignment across your leadership team because of how they influence like their departments. And so depending on the culture of your company and how you do things, those answers could be different. It could be around compensation design. It could be just how you talk around your scorecard and how you measure your business. But those metrics have to be front and center to the way you operate on a sort of day in, day out basis, that everyone knows they're important. They then like filter into how teams operate, particularly cross-functionally. And so if you follow your customer journey as an example, it might be like, well, how do we position this in our marketing material? How do we talk about this? Why is this important? When we get into sales, do we have the right incentive structures there? Are we measuring things correctly? If we're going back to the base and selling, what are we doing with our CS team to make sure we're driving CSQLs or whatever metric you're trying? What are we making sure we're doing to drive adoption? Do we have the right product-led motions? That stuff happens because top-down you communicate that it's important and people align against those priorities. Everyone wants to be part of like the team. They all want to do great work. They want to understand that their job matters. I think as a leader, it's incumbent on you to set that direction on which metrics you're really kind of measuring them on, and what you see is like organically great cross-functional work. So you might see someone who's really, their job as a product leader or in sales is about onboarding successfully to the product, but they understand attaching payments has a meaningful churn impact. And so they know that if they get a payments attach, even though they're not the payments team, but they know that that's an important part of the journey. And they know that like churn is the metric they're responsible for, but they can connect the dots because maybe your finance team has led with the analysis that says like, actually our customers who attach payments churn, meaningfully percentage points different.
Right.
And that changes our LTV. That changes the way your marketing team thinks. And so your communication at the top around priorities is really important. And then you just have to sort of like match your situation. I think the playbook, the reasoning by analogy, like this group, I know like we get pretty frustrated by those playbook type things. Because yeah, it's 80% the same in a lot of SaaS, but that 20% is what makes your product special.
Huge difference.
And that's where actually like the payment stuff matters. It's like, what's different? Because if it wasn't special and different, and you just could run the same playbook over and over again, like
Everybody would be doing it.
yeah,
Everybody would do it,
like
right? Then it's not vertical specific anymore.
yeah, and you'd all have
It's
100%
horizontal
attach, and
platform,
everyone would be doing 100% of their volume, and it would just be like, cool, we're done. And that's just like so unbelievably far from the case.
I want to add on to that too. I totally agree with everything AJ's saying, but I think just recognizing the culture within your organization too, as you think about like communication from top down, what exactly is it that you're communicating? Like, why is this a priority for your business? Because I will tell you, and you all experience this with your employees at your companies, they work for vertical SaaS because they love being connected to the customer. Like, they enjoy coming to work every day because they're passionate about the customer that they serve, right? The message that it's just going to help us make more money is not going to resonate with them. It will fall completely flat. And so you really have to communicate, why is this? And that's a good question for you to ask yourselves as well. Why is this a strategic priority for my business, right? And making more money, yes, that's a benefit of integrating payments, but it shouldn't necessarily be the priority there. There's a reason for it, and that's delighting your customers. You're creating a better customer experience, whatever it might be. And that's a message you really want to permeate across your organization, because, if it's just about we just need to make more money, it is absolutely going to fall flat.
Yeah, it doesn't work.
About solving that customer problem.
We're going to go back to solving the customer problem.
All about product market fit.
All about product market fit.
So I want to do a quick round of kind of rapid fire questions. So just brief answers. We'll do 3 or 4 of these. First thing is, I get asked all the time, what should we look for in a payments vendor, payments partner, payments processor? We'll start with Rahul. Just real quick, what are some of the key things that maybe people don't often think of? Obviously, price. Everybody knows price is important.
Yeah.
But beyond price and economics.
Technology, prior experience at your scale, and the ability to innovate, I think, and be a willing partner.
AJ.
You have to choose, is this a partnership or is this a vendor relationship?
Yeah.
And if this is a partnership, you want to find someone who's invested in your success, who makes sure their success is based on yours, who you know you can trust and rely on. Every one of us, our peers, et cetera, has been through a disaster moment. And it is going to happen, whether it's a big loss, misrouting of funds, an outage, it's going to happen. You need to have a partner that you know takes it as seriously as you do.
Emily.
All of the above. I will say I've had some really great payments partners in my past. We've been through very, very troubling times. COVID was probably the worst, and I remember the day that it was the worst, our best partners, I got phone calls on my cell phone. How can I help? Is everything okay? Let's get through this together. And when you're dealing with other people's money, your customers, like, you really want to have that type of a relationship with your payment processor, because you don't want to be sitting there without any support and trying to figure out where $100 went or $10,000 went or $100,000 went.
You don't want to hear, oh, I need a list of priorities. It's like, they're all important, guys.
Yeah.
Like, every single one of those customers is important, and it's life or death for them. And if you're like, well, I just need to prioritize them, like, you're misunderstanding prioritization and urgency and like capacity, and those are different problems that get solved different ways.
Yeah, I mean, I think when you do embedded payments, you're taking responsibility for the revenue stream for these SMBs. And it's their payroll, it's their ability to pay for the supplies they need to open the next day. And so that really matters in a way that I think most vertical SaaS operators don't really contemplate, because your workflow may be down, but you can still run the yoga studio. Like, you'll figure it out, people will show up, you'll still run the yoga class. But when they don't get their paycheck, it's a big problem.
Like, these customers don't have access to capital markets. They're probably very underserved in every financial product in most cases. And the furthest down market, this isn't just can they buy their supplies, it's can they make rent or their mortgage, can they send their kids to school. It is really easy to be like, well, I work at a company, like, payroll runs all the time, and like, maybe we're burning, but we have investors. Like, it's not how running a yoga studio or a one-person law firm or a trade, like, that's not how that works.
Yeah. All right, another rapid
quickly
fire.
Add is like risk, like just risk, like knowing that your partner knows how to manage risk, has credibility in that space, because if something bad happens, the last thing you want is for you to be like holding the bag while your partner's got some issues.
Yeah, we're going to come back to risk in a minute. Another rapid fire question. So Matt opened up this morning talking about secrets. What are some secrets or maybe tricks of the trade that you've learned over the many years that you can share? If you can highlight maybe just one. What's something that people don't know about embedded payments that they should? Emily, we'll start on your end.
Back to me. If you guys have something, feel free to jump in.
Yeah,
I got one.
This
for
is
you.
a surprise
AJ,
question.
sorry.
Yeah,
Go
I got
ahead.
one for you. Like, put in the work to understand how interchange works.
Interchange.
Like, it's not, I was just like, get a number out, or like, our blended take rate is this, and you don't really think about, even within debit, regulated versus unregulated, or how you use the card, or all these things that matter. And so, I'm not saying spend all your time thinking about basis points, but if you want to actually like start to understand that, put in the work to understand interchange.
All right, I'll feed off of that. That's a good one. It ignited. So I think to elaborate on that is who in your organization, if you really want to be successful, who's that self-starter who gets sucked into the payments vortex that's just like really interested in it, right? Even if you hire specialized folks, how are they getting trained? How are they learning? Are they listening to podcasts? Are they are they a nerd like me and I pull up the Visa interchange report because I'm just curious what's happening?
If they have a favorite interchange report, that's a
there
really good sign.
Is there a favorite interchange report? We talk about being payments nerds, but it's like, who is that payments nerd at your organization or within your circle? That is that person who's really just, they love it. They like the industry, they get sucked into the vortex. And that, I think that I couldn't
put a number behind that, but I think it has a lot more impact than you would think.
I think that's interesting. So I also host a weekly podcast called the Payment Strategy Show. You can find it on Spotify, and we talk to different people in payments. And one of the recurring themes week to week I ask is, how did you get into payments? And the overwhelming vast majority of guests tell me they were doing something else. The CEO said they need someone to kick off a payments project. They raised their hand. They didn't have any idea what it is. And years later, they've now done it 4, 5, 6 times, and they just had to learn all those things. So I think that's a very interesting point about who is that self-starter, who is that person, even if they don't have a payments background, they can learn quickly. Rahul, any secrets to share?
Everybody probably know this one already, but I'm going to say it anyway. Every transition in payments has always been about convenience, more often than not. From coins to paper money to checks to cards to Venmo, whatever. Like all of that has been about convenience more often than not. And often, the world of payments is moving faster outside the US than in the US, especially around convenience. And so it's helpful to always look outside and learn like what's happening in Asia, what's happening in Singapore, like whatever market that you're looking at, just to see where the puck is going, because more often than not, you'll be doing that next year yourself.
Very good. All right, one final rapid fire question, and I'm going to shortchange it because we could spend an entire panel talking about it, and of course the topic is risk. We talked earlier in the last panel, or heard earlier, about AI and how it's supercharging so many industries. AI is unfortunately also supercharging fraudsters, and at Rainforest we see that firsthand every single day. Our risk team sees unbelievable generated identities, generated documents, forgeries, things like that in ways that we haven't seen in the past. And so, again, maybe just in 30 seconds or less, which I know is tough, but any thoughts on risk management and how someone who's maybe starting payments should think about that? Should they take it on themselves to earn more? Should they outsource it? Any thoughts?
Yeah, I can start. I mean, there's no one right answer more often than not. I think risk is one of those places, if you get it wrong, it can be very expensive. It can kill your entire business as a vertical SaaS company. And so, I err on the side of keeping risk very controlled early on, especially as an early stage startup, and making sure that you're minimizing the amount of risk you're taking, while at the same time trying to effectively figure out a successful payments business for yourself. And often that comes in the form of lower take rates, et cetera, but you're doing that because you want to, again, optimize for attach, optimize for usage, et cetera. And then once you figure it out, then you can open the aperture on risk and be like, hey, what are the other risks you're willing to take for this business? And the risk can be in many forms. It's what's the product risk? What's the onboarding risk? What's the mechanisms there? How do you deal with it from accounting issues and things like that? All kinds of risks there. So whole set of dimensions that you can manage on, but I tend to start smaller and kind of expand from there.
I think a couple things around it. One, losses happen. Your goal is not zero. Your goal is to budget for them and plan accordingly and know they're going to be lumpy. But if you're at zero, the analogy I'll give you is if you want no losses from your retail store, frisk every single person who walks in and out of your store. Nobody's going to shop there. This is really not a good model. So you have to just understand this is part of the cost of doing business, and you need to plan for it and know it's going to happen. But you need to know how big your aperture is, know how big the losses you can actually afford are, avoid catastrophes. I think the other part is there's the generic fraud and risk tools that are available that solve a lot of the problems. They're actually very effective, and trying to build them yourselves is not going to work because you just don't have enough data and focus to do that. But you should buy those kind of things. The other part is what's idiosyncratic about your platform, the way your customers act that would alert you to this is not normal behavior. So as an example, law firms, there's no way someone processes meaningful transactions on their first day on Clio. It just doesn't make sense. The product's too hard to onboard to, you need to set up too much stuff, and the normal business model for a lawyer would be to get clients and go through qualification, and sometimes, not always, do work and then bill at the end of a cycle. And so if they're processing right out the gate, particularly if they haven't set up onboarding or loaded documents, something's wrong.
Yeah, it's wrong.
And every single platform has idiosyncratic stuff, field services, IP addresses and devices. If they're on an Android device that's IP address is not where they do business, something's wrong.
Yeah, exactly.
Great points. Emily?
Yeah. nobody needs to set up payments right away and start taking payments. I think that's some propaganda that has been spread probably over the last decade. And I come from a world where it's a 9-page credit application to set up payments, but you shouldn't necessarily be optimizing for the absolute easiest setup flow so that somebody can set up in 2 minutes and take their first payment right away. That is a huge red flag. In the real world, a merchant does not need to do that. So I would try to ignore some of the noise around that. And also the second piece is your customers are not angels. There are going to be bad apples. I don't care if you serve doctors or pool pros or lawyers or lawnmowers or whoever it might be. You may be skirting around just fine, but you need to be aware that good merchants go bad and bad merchants get into your business. And so on the scale piece, I know I'm over 30 seconds here, but you need more data on risk. And so right out of the gate, it's really probably not a good idea. I'll just flat out say it, to take on 100% risk if you're not prepared to be able to manage that. But there are reasons that you would want to make that decision over your scaling journey to either share in the risk or take that liability. But your business is unique and you need more data and you need that experience, and you'll understand. It'll sort of be revealed over the time. But I would just be aware that it could absolutely crush your business. So be mindful of that.
All right, we've got time for just a couple audience questions. Raise your hand if anyone has questions for our panel. Do we have a microphone? All right, Kyle. So it sounds like the question is, what are some strategies to convert check usage to electronic? Yeah. So we've got some good representation up on stage of industries that have a lot of checks. So real quickly, any strategies that you've found that work to help electronify those payments that are typically done offline?
Yeah, I mean, we have historically, checks is obviously a big thing in the trades business, and I go back to the same thing, which is convenience, right? And what's the value that you create for the end consumer and for our merchants, as in that journey, when you can actually say, you know what, this is a better experience for you, a better outcome for you. So I'll give you one example, right? We had a lot of checks in our business, especially at the high end when you're like a big job. And then when you start to introduce like financing as an option, so you're like a roofer now and you're like, hey, you know what, I can now offer financing. I can be like, you can pay me by check, but here's also some financing options for you. You actually end up seeing that that's a better outcome, because a lot of times you'll get 0%, things like that, better outcomes for the end consumer, but also it's a better outcome for that business. So that's one way that we've actually seen like check volumes change for us.
So checks will be here in 5 years. They're declining about 6% per year. So it's going to be a long time before they go to zero. And it is North America idiosyncratic in a way that's actually kind of frustrating. But they're going to be here. I think it goes back to the very first thing we said around the customer problem, though. You have to really identify like what that problem is. And I think where you've seen success in trades or field services and things like that, the problem has been dealing with a check can take me away from a revenue generating job. So like I have to go to the bank, or I have to take it to an office. And hands can be dirty, those kind of things that can screw this up, versus, and so you have a different problem you're solving. You have to build an economic model around it. You have to see if that works, but it can. The problem we have with lawyers is that like it kind of just arrives in the mail and they cut it open and scan it. And so the depth of that problem is different, and the way you have to think about it is different. I will say if you're doing enough volume, like truly enough, which is a lot, you should be thinking about how long you're holding on to that money, whether or not you're in like a third-party sender model, and whether there's float that you can generate off of it. And that gets into the question of like, what is the like the problem, the solution, and the market, and then what is the the validity of the business model around this. And you may find that like I need a different business model to support this way of moving money than the like variable per transaction fee. I just like have to think about this differently.
Right. All right, we're going to take one last question quickly. Anyone else have a question in the back?
Yep.
Or monthly dues, and most other do is via ACH to reduce processing rates. Flag, we have a lot of issues of like, hey, if I'm in northern Michigan, you may not connect to my bank.
Yep.
Pending test being a really big issue. It also seems that there's a lot of arbitrage in ACH and processing rates. What innovation do you guys see coming to the ACH payment landscape? And I know Built and Wells Fargo has a meaningful deal, but how do you see ACH payments becoming potentially revolutionary in some of these smaller versus SaaS industries?
Yeah, so the question, just to repeat it quickly, is in some industries, ACH and bank rail payments are pretty prevalent. You know, can we talk for just a minute on ACH and bank rails more broadly? Rahul, you want to take it? We'll just have two people.
Yeah, I worked at Plaid, so we can talk afterwards about all the Plaid issues that you had in the past. But
That's why I'm leaning right to you.
You know, I continue to believe that like adding intelligence on top of like the bank rails that also are like checks very, very old, there's a lot of value there. And I think increasingly you're seeing things like RFP and stuff like that start to come to the forefront as well that hopefully start to make ACH feel a lot more real time, a better, more convenient experience. So I think there will be issues, obviously, but at the same time, I do think that the ball is moving forward there and it will get better over time.
Yeah, and RFP, just to explain, so with the real-time payment rails in the US, both the clearinghouses, RTP real-time payments, as well as FedNow, which is the federal government's answer for real-time, it's just a push payment. You can't pull money like you can with an ACH, and so RFP is a request for payment. It essentially is pushing that request to the bank, and so you'll have in your own banking app something pop up and say, do you authorize this payment? It's like on Venmo when you request money from your friend. Yeah. Same concept, but built natively into the rails. So a lot more to come on that. We are out of time. Thank you so much to our panelists. Round of applause. Thank you.